Olivia Bono-Voznenko for Modern Wall Street, and it's Thursday here. You know what that means. It's the Voz, it's Sarge, it is here, and it's a little tricky right now with the weather, but we're holding up okay, right, Stephen?
Oh, the weather's no problem. It's actually kind of refreshing.
Well, what's really raining is oil. Man, what a turn of events. How come after 8 years these guys are reaching a deal, or so they say anyway? What's going on here?
I'm extremely skeptical of this deal. Now, obviously, it was a tradable event. If you played it right, oil was up a second day today, although due to other reasons, every sector was lower, so it didn't really help the energy sector all that much. But if you look at the OPEC agreement, basically you have 14 countries that agreed to maybe consider an agreement in 2 months, but 3 of the 14 countries might be exempt. To me, that sounds kind of like, let's just put something out there so they buy oil today, and maybe we can take advantage of it for a little while before they figure that the man behind the curtain isn't the wizard. Yeah.
Well, also up a little bit is GDP 1.4. Are we ever going to see this number in the 3s and 4s again? And do you think maybe one of the candidates we saw on Monday could help accomplish that?
Well, for the third quarter, obviously the second quarter was really lousy. The first quarter was really lousy. For the third quarter, you're probably going to see a number in the 2s, which will be really good because the fourth quarter we're going to go back into the 1s. It's going to be a lousy year. 2016 was a lousy year for the economy. I don't see it shaping up all that much. Now, when you talk about the presidential candidates, it's easy to dislike both of them as people. So if you don't want to root for anybody and you want to play the market, what they have in common is they both want to borrow and spend. They're both going to probably put forth large fiscal policy plans, which will probably eventually get shot down by Congress in either case, or at least whittled down somewhat. But if you're looking to invest in the possibility of a larger fiscal plan going forward in 2017 and beyond, you probably want to go aerospace, defense, construction materials, those kind of things. The things that will benefit with either president, regardless of who wins.
Well, of course, there's a lot of attention surrounding the election, but all the attention was on the banks today. We got the CEO of Wells Fargo in the hot seat, Deutsche Bank drama. Sarge, what's your take on this? Should we be concerned about the financials?
Obviously, you have to be concerned about the financials right now. Wells Fargo isn't even the big story. The bigger story is Deutsche Bank. They obviously have this potential fine from the DOJ, which is almost equal to their market cap, which is a big problem. They supposedly set aside 5.2 billion euros in case of a rainy day for fines, for litigation, that sort of thing. They also have about $4.6 billion worth of cocoa bonds that they've sold to the public and to other institutions in Europe. Now, cocoa bonds, what they do, in an emergency, the bank can wipe out the investor, not wipe out the investor because they get equity in place of the debt, but it cleans up the balance sheet for them. But it doesn't do anything about the fines. It just makes their balance sheet a little lighter. And they have about 46 trillion, not billion, trillion euros worth of exposure to the derivatives markets, which equates about $51.5 trillion. So their exposure in the derivatives market is about 3.5 times the U.S. debt, or maybe 2.5 times U.S. debt. But it's really big, and they are probably the most globally important systemic bank anywhere, even larger than J.P. Morgan in that regard. So, yeah, they're important. And right now, can they figure it out? Yes, but you can't blame the hedge funds that reduce their exposure to possible counterparty risk, which would be what would really, it was what happened with Lehman Brothers years ago. This isn't the same as Lehman. I'm not saying that, but when somebody fails, somebody else is going to fail. It does cascade down the line.
Well, Sarge, it is starting to rain. We're going to have to take shelter soon, but where can we take shelter in the markets right now during all of this?
You know, it's not a time to be in biotech. I mean, I think it's never time to be in biotech because it just scares the crap out of me. But and obviously you want to put financials in the same box right now because they're too scary. If you're going to play the financials, you got to do it through the options market. I don't think you want to be putting that much capital to work in that space right now. Energy, it has the potential to move the right way based on these oil prices. You might want to do something like if you want to get long energy names, maybe you want to sell calls against something to reduce your capital outlay. It might reduce your profit in the long run, but it will also reduce your risk. It's a time where actually some people are thinking of raising cash. As the market's near the all-time highs, it's really bizarre, but I have friends that are doing that. And I'm thinking right now I'm at 27.5% cash. I'm thinking of going up to 30.
Okay, Sarge, well, on a bank note, I guess we got to bounce like a check. Thank you so much, and we'll see you next Thursday.
You're incredible.